But as far as a single entry point to the industry is concerned, the one we recommend always is Johnson & Johnson, because it's the largest in the US and it's a combination of healthcare, drugs, pharmaceuticals, but it's also got medical devices, that's knees and hip joint replacements and that kind of thing, and then consumer healthcare products like shampoos and the likes. $335 billion worth of market capitalization, price earnings ratio 21.11, dividend yield 2.58, still has a AAA credit rating. A very good and safe company for people to start off looking for.
And as you said, it's well diversified across all the fields, right from sort of OTC, over-the-counter drugs, the heavily regulated pharmaceuticals, normal consumer products, and then the medical devices is actually massive, although they don't sell it under Johnson & Johnson.
Yeah, they bought a company called Synthos at some point along the line, and then you see the brands out there in the marketplace.
So we wouldn't recognize the brand as being Johnson & Johnson, but that is probably almost a third of their business.
Well, let's talk about the pharma piece, though, because if you look at what they've got here, I mean, their number one seller is a drug called Remicade, which is one of the leading drugs, which is for rheumatoid arthritis. Now, let's just be clear. People used to die when they were 40. Then things got better with humanity, and they used to die when they were 50 or they were 60. Now people live until they're like 80 or 90. The problem is, a couple of things are going to happen to you when you get that old. And one of the things that's definitely going to happen to you is that your knee and joints and your hands and everything's going to get sore and swollen. That's because there's a slow deterioration of the joints. So drugs like this and Enbrel and Humira basically relieve that pain and tension and give you better mobility.
Correct,
and it's an absolute no-brainer.
There'll be a demand for it. I mean, look, there's lots of competition in this market as well. Make no mistake, but Johnson & Johnson have got the leaders in that particular sector.
What about the patent protection issue, though? Because, like, let's take another example. One of their other big sellers is a drug called Concerta, which is what the teenagers take if they can't concentrate properly at school. Now, if you go to the psychiatrist and they prescribe that drug, but there's a cheaper generic thing that's made by Dr. Reddy's in India, do you really think that parents are going to take the risk of going with that product when the guy says, listen, stick with Concerta because it's the number one product, even though it's more expensive?
Because the generics won't be sold in South Africa or America unless they're fully approved and are safe. So it comes down to a costing issue. It comes down to a costing issue. I think a lot of people, and certainly the medical aids, will be pushing for the generic. So you've got the protection under patent, but when that expires, you've got to cut your costs. You've got to cut your selling cost, because simply, otherwise you won't compete. So you can maybe charge a 5% margin or a 10% margin when something comes out of patent, but that's it. But if you got the right drug, you coin it during the patent.
Let's have a look at the chart, because this one will reveal a nice move, a little bit of a wobbly period, but it is trading close to or around its all-time highs, $124 a share. There's one new piece of information about this company. They are in the process of trying to buy for $30 billion a Swiss-based company called Actelion. Now, Actelion was a thing which got spun off by some Swiss scientists out of Roche, and they make a particular drug called Tracleer, which I think is used for sorting your heart out if you're a bit of a, sort of bypass threat. So that's an interesting one, Partly, I guess, though, why they're doing this deal is to try and utilize some of their offshore cash.
Correct,
And that's a big thing with these companies. They make a lot of money offshore, but they don't like taking it back to America.
They don't like taking it back to America. No, but I mean, maybe Trump will actually force them to do that.
That's one of the things Trump's talking about, is a discount on the tax.
Get the guys to pull their money back in.
But look, $30 billion for most people is a lot of money, but when you're Johnson & Johnson and you're worth that...
It's relatively small. I mean, they've done lots of acquisitions as well over time, but they generate serious cash.
And we shouldn't really ignore, but they make things like Rogaine and Neutrogena and Lubriderm and Band-Aids and baby care and Listerine and Visine, AccuView, the lenses and all of that stuff as well.
They're right across the board. I mean, when you look at their cash flow, they're spending billions on buying back their own shares because they don't know what else to do with the shares. Now, that's good and bad. It's good for an investor, but it's also bad for an investor that tells you they don't know anything better than to do with their money. That's why they're still hunting for the acquisitions. I mean, they've got about $4 or $5 billion worth of share buybacks going into the system.
Just on a constant basis.
They're cutting costs. They're actually highly efficient.
.com companies, they don't give these shares away to their management and end up with the same number of shares in issue. So it's a net positive. Okay, are we happy to call Johnson & Johnson?
Yes, I think so.